Hi, I'm Todd Russell, and I'm a certified financial planner professional in Nashville, Tennessee. I created this site and these videos to teach and inform about long-term care insurance product solutions, how they work, the different plans, and to help inform you as a consumer the different types that are available in the marketplace so that you can make an informed decision about long-term care planning. This is an introductory video about the 4 different types of long-term care product solutions. You can find more videos and information on my website at www.myltciplan.com. So traditional long-term care insurance is the original model. So it is the one that most people have heard about even if they've never purchased it. And this style of a policy started as a nursing home only plan, but that's changed over time. Today's traditional policies are a lot more comprehensive. They'll cover care in home, in assisted living, or even in skilled nursing facilities. Traditional long-term care is pretty straightforward. There's no cash value or equity in the plan. There's generally no death benefit, just coverage that's designed to purely pay for long-term care if and when it's needed. And I'll generally refer to these types of plans as a use it or lose it design. And premiums on traditional LTC are usually paid for life unless you go on claim. Sometimes they have waiver of premium provisions built in that will waive premiums if you are on claim. And it's also important to understand with traditional LTC that premiums can increase over time. And at the time of this video in 2025, it's very common for long-term care policies that have been in place for 10 or 15 years to have received premium increases in the past. And these policies can insure just one person, or if you're married, both spouses can be insured on a policy and you can share benefits. So if one spouse runs out of benefits, they could potentially use the benefits of the other one if that's a feature that's included on your policy. So the second type of long-term care plan is a life insurance with long-term care rider. And so this type of policy starts as life insurance first, and then we add on a long-term care feature to it. And here's how it works. So if you need long-term care, the policy begins accelerating the death benefit to help pay for it. But if you don't use the full amount for care, whatever is remaining in the life insurance benefit will go to your heirs whenever you pass away. So unlike traditional or hybrid policies, this long-term care pool is usually fixed. So as an example, if you were to have a $250,000 policy, that's the total pool available either in the form of a death benefit or long-term care, or you could use half of it for long-term care, and when you pass away, the remaining would go to your heirs in the form of a life insurance benefit. But there's generally not an inflation rider you can add for the death benefit to increase over time. So basically, the value of the benefits could erode over time as long-term care costs increase. So one way to combat this is to design the monthly benefit to be a little larger today so that in the future it'll be an amount that's more suitable to cover long-term care costs. And these plans are individually underwritten, which means your health still matters. For clients who already need life insurance, or maybe you have an old policy, you don't really need it anymore, but long-term care is a concern, then this can be a great way to repurpose existing life insurance policies into a new plan that can provide long-term care protection. And that's a common strategy for people, is to repurpose old policies they don't necessarily need for income replacement anymore, and long-term care becomes more important the older you get. So that's one thing to consider if you do have a current life insurance policy. Premiums on these policies are flexible. You can pay it in a single lump sum, you can pay it over 10 years, or you can even pay it ongoing over the course of your life, just depending on your preference and product design. So think about this as a dual purpose plan. So you can use it for care if it's needed, or if care is never needed, then it creates an additional pool of money for legacy for the benefit of your family. So the third type of long-term care solution is a hybrid plan or a linked benefit plan. And this basically provides the best of both traditional long-term care insurance and the life insurance with the long-term care rider. It's a combination of both of these plans. So this structure is designed to work in all three major scenarios. What happens as you live, what happens if you choose to quit, or when you die, what happens. That's what makes this product solution appealing to a lot of different clients. So as you're living and if you need care, you will have a long-term care benefit pool that's typically 2 to 4 times larger than the base death benefit on the policy. So if you needed to quit the policy for some reason, most have a return of a portion of the premium that you've paid into it. And whenever you die, there is an income tax-free death benefit that's paid to your beneficiaries, whether you've used the long-term care benefits or not. So these policies are available as individual or joint, so a couple can share benefits between the two of them. A funding advantage with these hybrid plans is you can use existing life insurance policies that you may no longer need. You can do this through a income tax-free 1035 exchange where you can move cash value from one existing life insurance policy to a hybrid plan. So a common scenario that I see is people may acquire a policy, let's say in their 20s or 30s, for the purpose of replacing their income or maybe as a forced savings plan. And now people are in their 50s and 60s, and the need for that policy to replace their income, it's just not as important as it was earlier in their life. So now there is a life policy with cash value sitting on their balance sheet, and a lot of the times they're unsure with what they want to do with it, and they don't want to continue funding the policy. Well, one option to consider would be to repurpose it to create a hybrid long-term care plan for yourself. So these policies can be funded several different ways. Some clients prefer a single lump sum where it's one and done. Others might fund it over a 10-year window or even over the lifetime. But either way, the premiums and the benefits in these hybrid plans are guaranteed. There's not going to be future rate increases, and there's no moving parts. The premiums and benefits are fixed and predictable, so you can always plan with certainty. So the fourth option is an annuity with a long-term care rider. And this is generally designed for people who are 65 or older and who have existing assets they may want to reposition for care protection. And these plans are generally funded with a single premium, so you would just move a lump sum into the contract that would immediately create a larger pool of money that can be used for long-term care. And these are generally beneficial for clients who may not qualify for the other three options due to health issues, because the underwriting on the annuities are generally a lot more liberal. Often there's no medical exam and maybe just a phone interview or a simplified health questionnaire to complete to apply for the policy. And I mentioned on the previous slide that you could repurpose an existing life insurance policy into the hybrid plan through the 1035 exchange. Same type of a scenario here with this annuity with long-term care benefits. So if you have an existing non-qualified annuity or even a life insurance policy with cash value, you can generally do a 1035 exchange to fund the annuity with long-term care. So you're effectively turning an asset on your balance sheet into one that provides long-term care benefits. And so the leverage on these is generally 2 to 3 times your account value. So as an example, if you have $100,000 allocated to this, it could become $200,000 or more for long-term care. And another benefit of this plan is if you never need care, your account value is still available. So you may take withdrawals from it for income, you could annuitize it for income, or if you never used this plan, your account value would pass on to your heirs at your death. So let's take a look at this comparison grid. So this breaks down the 4 major types of long-term care policies we've discussed and how each one behaves in 3 key scenarios. 1, as you live and need care. 2, if you decide to quit and cancel the policy. And 3, when you pass away. I think this live, quit, or die framework helps provide a structured way to see what each policy actually does in these circumstances. So this is a snapshot, but it's a great way to compare how these options might support you across all stages of life. And if you'd like a copy of this grid to reference or share with someone, I've made it available as a free downloadable PDF. The link's below in this video, or you can find it on my website. So here's what I'd like you to take away. There's not a one-size-fits-all option when it comes to long-term care insurance. Each of the four policy types, the traditional, the hybrid, the life and long-term care rider, and the annuity and long-term care rider, they all bring something a little different to the table. And depending on your age, your health, your financial goals, and your personal preferences, one might be a lot better fit than the others. So I just simply want you to know that you do have options. And I like the live, quit, and die framework because I think it's a great way to evaluate any plan you might currently have or you may be considering. So ask yourself a couple of questions. So what happens if I need care? What happens if I walk away? And what happens when I die? And remember that your health and age are going to impact what you qualify for, and the premiums can vary widely among these options. That's why it's important to work with someone who understands and offers all four options and who can help you analyze them and who can also help design a plan that fits your life. To help you go deeper on these four options, I have created individual presentations that break each product solution down in more detail. And those will help you understand the pros, the cons, and the design options that are unique to each of these policies. So if one of these plans stood out to you, I encourage you to keep going and watch the deep dive videos, explore your options, and start designing them with the kind of care plan you'd want your future self to have.